Welcome to the March 2023 edition of Trading Japan's Energy Markets, sponsored by my good friends at JPX. So this month is a kind of hodgepodge of information. First, I want to talk about a phenomena you can't read about, but we know about. There's a number of international trading companies that have entered Japan already, 4 or 5. I would say that number is going to double, easily predictable to double within the next 6 months. So you'll have, give or take, a dozen international trading companies actively trading in the Japan energy marketplace. This is going to be very positive, both for the spot market and especially for TOCOM in the futures. That's the first item. The second item, if you were watching last month, I talked about a webinar that we did jointly with TOCOM, talking about market-based pricing. The 1 year fixed, the block index, the stuff you see in the other markets that around the world. Interest level on that was ridiculously high, astoundingly high. 327 people registered and watched this particular event. So they got a good education on how to utilize TOCOM to enact and enable these kind of products. So that's actually, I think, very positive news as well. The third thing I think will also impact TOCOM that you haven't seen yet, but all the utilities except for a couple put in for large rate increases, which of course there are hearings going on this month, government's worried about it, etc. But by and large, the utilities lost more money this last 12 months of fiscal year than they ever have in history. So they're all putting in, or most of them are putting in for larger increases in rates, sometimes as much as 40% or so. So the customers are going to hit with sticker shock. So I think that'll prompt a lot more shopping around to see if they can get a better price. That'll show some of the retailers now doing market-based pricing. So it'll take some of that up and down sticker shock out of the equation. So I think this coming sticker shock in April will drive more customer shopping in April, May, June, so forth and beyond, which also will help the volume and liquidity on TOCOM. So last, but probably the best is a year ago in April, the feed-in tariff system, whereas the utilities bought all the renewable supply based on government set rates, has been eliminated and now moved into feed-in premium, which has been in existence for a year. So the corporates are now catching on to wanting to buy renewable supply, both for the carbon market laws that have been put in place and the carbon market itself, which will also be on JPX. And they ran the test successfully. So we're looking forward to the actual real market starting in the near future. But nevertheless, I think a common instruction is going to be that virtual power purchase agreement where it's a contract for difference kind of structure. So when you think about the spot market and long-term pricing, I put a chart up here that showed what our prediction of the forecast ranges of PPA prices are going to be, somewhere in the high teens to 25 yen kind of range. And you look at the 1 year, you look at the Tokyo spot market price, that's not out of line at all with what the market's doing. But I think the key here is going to be a VPPA model where there's not a physical delivery, you're not adding wheeling charges across multiple utilities, et cetera, et cetera. Instead, it's more of a contract for differences. On that basis, I believe that TOCOM will get used a lot for a 12-month strip to hedge on an annual basis, the cushion the differences or the swings it could be. As you can see, there's pretty wild swings here, to kind of cushion that for the end user's benefit, as well as the renewable generator's benefit, to essentially come up with, you know, a variation on a pure contract for differences to more of an annual strip with a set number. Anyway, I think that's where that's headed. I know we're working on some of that in some areas, so look forward to seeing that kind of emerge. That's it for this month. Thanks for watching.